Hey guys, in this video I'm gonna cover the concepts of inducement, right? So with inducement, it's basically a manipulation in the market where we see smart money manipulating the market by forming liquidity to entice traders to jump into the market only to be taken out and then push in a certain direction, right? So on the screen right now, I've got two patterns, both are uptrend and downtrend, highlighting how inducement is created, right? So in the first pattern, we see price pushing to the downside, obviously, right, forming this low, and then from there it forms this double tap right here, inducing traders to sell the market, only to push the market to this point, and then price goes all the way up right here against the direction, wiping the liquidity on top here, then continues with the direction, right? So in the second pattern, we see the same thing play out where price pushes to the upside, forms a high, right? Forms this double tap, pushes there, comes and grabs the liquidity, and then pushes up, right? So these double taps or trend line setups, we tend to see them within these levels, right? Where smart money creates these patterns to entice traders to either sell the market or buy the market before the actual move takes place, right? So if we don't have some sort of double top or double bottom, we have some form of trend line, right? So for instance, we're gonna have a push to the downside, and then price is gonna form some trend line setup, something like that, right? Forming this trend line, manipulating sellers to sell the market, which it does sell for a few pips and then goes back there, grabs the liquidity, pushes down, right? So if we're not gonna have such a pattern, we're gonna have such a pattern. So I'm gonna go on the charts right now, guys, to show a couple of examples on how you can support inducement and you can stay away from it. So first thing first, you have to identify your key levels that you're looking at for, right? Your points of interest. Because once you know your points of interest, you'll be able to know which is the wrong point of interest. So on my end, I have this imbalance right here that needs to be filled up. I see that price pushes up right there, right? Price keeps on pushing up, breaking structure, breaking structure, breaking structure, pushes down, forms this kind of a trend line right here, which it respects, right? Pushes up like that. Most people at this point have been just thinking price is now going to push to the upside or try to enter more buys, especially those that entered off this trend line, right? So what happens that price comes off, grabs the liquidity down here, right, which is the stops below this trend line, and then it pushes to the upside, right? So this is going to be the inducement, right? This right here pattern that forms like a double bottom type of pattern is what we call inducement. So another example in inducement, let me take care of this. Okay, so another example in inducement is when we see price, right? We see price pushing to the upside, right? We see price pushing to the upside here. Price has got this interest right here, right? Got this interest as a buy side liquidity. What happens that price gets here, right? Starts to consolidate within its levels, and then it forms this pattern, right? It forms this similar pattern that we saw previously, this kind of like a trend line type of pattern, right? A slant double tap type of pattern. As you can see, this is a trend line where price does that, bounces off this trend line 3 times, people buy obviously from here. Then what happens, price comes and takes out the liquidity beneath and pushes to the upside, right? And then after it pushes to the upside, obviously it breaks structure. We expect it a pullback, right, within one of the supply zones that have been highlighted. What happens that price fills up this imbalance, forms this kind of inducement right here, right? This double bottom, right? Forms this kind of double bottom pattern, pushes up here, then price eventually comes impulsively, grabs the liquidity below this, and then it pushes to the upside all the way, right? And then another example that I'll give you guys is this right here, where we see proper inducement of price. It forms another kind of like trend line, right? Inducing buyers to buy the market. Price comes all the way, grabs liquidity beneath it, and then pushes to the upside. So the thing that you have to make sure that market structure and the key levels are being highlighted, because once you understand market structure, all this is just confluence to make sure that you've got the perfect entries, you've got a better winning rate and all that, right? So you're gonna have to build confluence using inducement, structure, obviously key levels, and liquidity, right? For those people that don't understand liquidity yet, you can watch the free course video, right? I sent a lesson in the free course that includes liquidity concepts, and it's going to help you understand liquidity concepts, right? So the last example that I have for you guys on inducement is this right here, right? We see price pushing to the upside. We have that buy side liquidity. Price comes here, and then what happens is that it induces buyers to buy the market at this point, only to come and wipe them out and then push us to the upside, right? So as you can see, the pattern is quite consistent, right? I've gone for like consistent 7 days, right? And price keeps on doing that. So this is quite some good edge that you're gonna have over the market once you understand it and you know how to apply it. So make sure you do go back test it, right? You go through the concept, you apply it on your charts, you back test it, you see how it works, and then you can send me feedback, right? You can send me feedback on the group, let me know how it goes. All right, guys, make sure you do subscribe, make sure you do like, turn on the notification button for more videos that are yet to come. See you in the next video.